Okay. Now, one thing that I would like to say here is I'm doing this problem only because of this income tax was deducted at source at 20% every year. Now, remember, whenever payments like interest, okay, payments like royalty, payments like rent, in many cases, when say, for example, I'm the lessor, I'm the landlord, and she's paying me, okay, she's paying me a royalty or she's paying me rent or she's paying me some form of interest. What she normally do or what she's supposed to do is deduct the tax on that interest on that royalty and pay me the balance. Some of you who have FDs with banks or you have your parents may have some fixed deposit with banks, if you've noticed, in many cases the bank deducts something called as TDS. The bank deducts TDS. Say, for example, if 10,000 is supposed to be paid to you, they will deduct TDS at a certain rate of 10%. So they may deduct TDS of 1,000 and only 9,000 will be paid to you. Okay. Now, when she deducts TDS from me before making the payment, does she keep the tax with her or does she have to pay it to the government? She'll have to pay it to the government. The income is not for her, but it is her. She is liable to deduct the tax and pay the same to the government. Even when our salaries are paid by the college, okay, they don't give us the full amount. What they do is they calculate tax accordingly, deduct the TDS, and only the balance is paid. But the TDS is not kept by the college. The TDS has to be paid by the college back to the government. Okay, so similar thing is happening here when the lessee is paying the landlord the royalty, the lessee is deducting TDS of 20%. The lessee has to, or they have said deduct TDS of 20%. Now the lessee, the TDS which is deducted is not a benefit to the lessee or it's not an income for the lessee. The lessee has to pay that TDS to the government, has to deposit the TDS in favor of the lessee. Another thing, is royalty a taxable income or an exempt income? This you all should know. Is royalty taxable or is it exempt? I know you all have studied this. Huh? Yes, it's taxable. And where is it taxable? What? Where is it taxable income? That is those exemptions that are available for it as expenses. But royalties, salaries is taxable under income from salaries. Royalty gets taxable from other sources. Okay. Now, in certain cases, what you all are telling me, Section 80 and all, are the expenses that are allowable. For example, say here, a person is writing a book. Okay, the author is writing a book, he will receive a royalty from the publisher. Now, when he's showing that income of royalty, he can also deduct the expenses that he has incurred in writing the book. That is what you all are talking about. Okay, now what am I? I'm talking about is the TDS part. Okay, so say suppose the lessee is deducting the royalty and paying the landlord. The lessee is going to credit that tax in favor of the landlord with the government. So when the lessee is actually filing his returns, who's the lessee? The lessee is the person who is using the set. When the lessee is actually filing the returns, stop talking. Or when the landlord is actually filing the returns, they can claim that benefit of the tax. They won't have to pay the tax because the tax will already have been paid. That's the whole point of TDS. Okay. So when, for example, as a salaried individual, I need to pay tax to the government at the end of the year on my total income. But part of the tax has already been paid. Who has paid it? The college has paid it on my behalf on a regular basis. Now, why this whole thing of TDS has come into the picture is not to burden the taxpayer once and for all at the end of the year. If tax is not deducted at regular intervals, I will pay a huge amount altogether at one point of time, which becomes too much for the taxpayer. So what they do is at regular intervals, TDS is deducted and the balance income is paid. Okay, so what we have to take into consideration in this problem is only the TDS. I'm going to do it in the books of the lessee as well as the landlord so that it becomes clear. So this is already done. Analysis of royalties payable. Who's the lessee? Mr. Raman, a scientist, owed a patent for the manufacture and allowed Hindustan manufacturers. So Hindustan manufacturers here is the lessee. Hindustan manufacturers is the lessee. Okay. So in the books of Hindustan manufacturers, we have royalties account. We have short working account. And we have the landlord's account. And here landlord is Mr. Raman. Yeah. Mr. Raman. Just call him Raman so that we don't have to write Mr. everywhere. Please stop talking. So we are going to do the accounts in the books of the lessee first. Okay. So the first entry, what's the first entry? Now in the first year we have the minimum rent is more than the actual royalty. What will be the first entry? Royalties account debit, short working account debit to landlord. Okay. So in landlord's account we will have on 31st, come. They have not said beginning or end. We'll assume it's 31st December. On 31st December 1997, by royalties and by short working. Royalty in the first year is 10,000. Short working is 2,000. Short working is 2,000. By royalties, by short working. So in royalties account, okay. Another thing is, please pay attention here. Now they have not given us any date as beginning of the year, 1st April, 1st January, nothing. Though I've assumed it's 31st December, if some of you just put it as 1997 is also fine. If you don't write the date, 1997 is also fine. You don't need to assume it. Okay, it's up to you. So royalties account to Raman 10,000 and in short working as well to Raman 2,000. So this is the first entry. Royalties account debit, short working account debit to landlord. What's the second entry? Payment. What's the entry? Landlord to bank. Now here you need to be careful. This is where the entry changes. They have said that income tax was deducted at source at 20% every year before actual payment of royalty. Now how much is he paying the landlord in the first year? 12,000. He's not going to pay the entire 12,000, but he's going to deduct 20% tax on it. Okay, he's going to be deduct 20%. So we are going to say in normally it would be 31st December 1997 to bank, and we also are going to have something called as to income tax payable. This income tax payable for the, we are in the books of the lessee. Income tax payable is a asset or a liability. It's a liability. Why is it a liability? The lessee has to pay the income tax to the company. Okay, so that's why it's credited. Landlord account to bank to income tax payable. To bank is because money is going out, credit, and income tax payable is a liability. Now, total is how much? How much is he's supposed to pay? 12,000, correct? He's not going to pay entire 12,000. He's going to deduct tax. Okay, so 12,000 into 20%. How much you get? How much you get? 2,000, 2,400. So basically, if he's deducting 2,400, how much will he end up paying? 9,000. So this is how you need to show it. It's only this much. Okay, so you need to just split that payment into how much is actually paid uh, and the tax. And finally, what's the last entry? Transfer the royalties. Where will we transfer it? Profit and loss or trading account? Where will we transfer this? By trading account, because we are talking about manufacturing here. Samran, please stop talking. By trading account. So close this. First year will tally. The landlord's account will tally. Here you'll have a buy balance carried down. So if you have a buy balance carry down, immediately bring down the balance. This is also tallying. See, if you see the first year, there's a balance carried forward of 2000. Go to the next year, again we have a similar situation where the actual, where the minimum rent is more than the actual royalties. So the same entry, royalties account debit, short working account debit to landlord. So on 31st December 1998, buy royalties and buy short working. Royalties are 12,000, short working is 4,000. 12,000 and 4,000. So post this accordingly in the royalties account. In royalties account, you will have it as 2 Raman, 12,000. And in short working account, again, you'll have 2 Raman as 4,000. Royalties account debit, short working account debit to landlord. Now next comes the payment, landlord account to bank, but we are also going to have an income tax. Okay, so 31st December 1998, to bank. So instead of 12,000, right now the payment to be made is 16,000. So 16,000 into 20%, how much you get? 3,200. And how much will be the actual payment? 12,800. And finally, transfer the royalties to the trading account. By trading account. I'm going to do landlord account as well. It's going to be bank account debit, tax deducted at source account debit to lessee. The landlord is receiving the amount, right? So bank account debit. Okay. Tax, we don't say income tax payable, tax deducted at source, because that's an asset for the landlord. That's an asset because he won't have to pay tax later. He already has paid tax through the lessee. So we're going to say tax deducted at source instead of saying income tax payable to lessee. I'm going to do those entries. That's why I didn't do the statement so that I have sufficient time to do more. Okay. So where were we? I think we need to close it. Yeah. Close the second year. 16,000. Here you'll have a balance carried down. Thirty-first December 1998. Buy balance carried down 6,000. You say buy balance carried down, immediately bring down the balance. 31st January 1999. If you see the statement, there will be a balance carried forward of 6,000. Yeah. And the royalties account closes. Now coming to the third year, now we have a slightly different situation where the minimum actual royalty is more than the minimum rent. So we go to our second set of entries. Actual royalty is more than the minimum rent. So we go to our second set of entries. What is the entry now? No short working. Royalties account debit to landlord account. So in landlord account, you will have it as buy royalties. How much are the royalties? I think 32 or 30, 32,000. The royalties are 32,000. Buy royalties. Royalties account debit to landlord. So in landlord account, buy royalties. And similarly here you will have to Raman, 32,000. Now, once coming to the payment, you need to be a little careful. Okay. Now, normally the entry is landlord account to bank, and also in case and there's any short working recoup. So we have a short working recoup. Plus, we need to deduct the income tax. Okay. So it's landlord to bank to short working recoup. Plus, we need to show the income tax. So first, I'm going to show the payment. So it's Raman account to bank to income tax payable on 32,000. How much is the, sorry, not 32,000. How much is actually being paid? 30,000. Okay. So on 30,000, how much is the tax? How much is the tax of 20%? Will come to 6,000. So actual payment is how much? 24,000. And how much has been recouped? If you see how much has been recouped, it's 2,000. So say we also say to bank, to short working, recouped. To short working, recouped. Short working recouped is 2,000. If you see, this automatically tallies. So out of 32, 24 is the actual amount that's paid, 6,000 is the income tax, and 2,000 is the short working recoup. If you say two short working here, don't forget to post it in short working. You'll have it as 31st December 1999 by Raman, 2,000. We also need to check for something else. What is that? What else we need to check? If there's any short working that's transferred to P&L account, but we don't have anything, so that entry won't be there. We don't have anything transferred to P&L account in the third year, so that won't be there. And finally, transfer the royalties to the trading account. Okay. Close this, close the accounts. So this tallies and it comes to 32,000. Then we also have here, we have a balance carried forward. Balance carried down of 4,000. By balance carried down 4,000. If you see your statement, if you see the statement, there is a balance carried forward of 4,000. So bring down the balance. To balance brought down 1st January 2000, 4,000 rupees. This account closes. And finally, we come to the last year. Again, a situation where the royalty is more than the minimum rent. So the same set of entries. Royalties account debit to landlord. So in the first entry will be by royalties. 31st December 2000. By royalties. Again, I think it's 32,000. So in royalties account, you'll have to landlord. Next, after that, what's the next entry? Payment. So again, the same thing. Landlord account to bank. We will show the payment first. Landlord account to bank. Landlord account to bank. To income tax payable. How much is he paying in the last year? Again, it's 30,000. Please don't calculate the TDS on 32,000 here. Don't calculate the TDS on 32,000. TDS or income tax needs to be calculated only on the amount that is being paid. So how much is being paid is 30,000. So again, it's going to be 6,000 and 24,000. Is there any short working that's being recouped? Yes. So we need to show that there's a short working again of 2,000 that's being recouped. So two short working recouped. Two short working recouped 2,000. Okay, so that's how this comes to 32,000. So if you say two short working here, in the short working account we will have by Raman. In the short working account it will be by Raman 2,000. We also have something else happening. Short working that is transferred to P&L account. So what will be the entry for that? P&L account debit to good. P&L account debit to short working. So in short working it will be by P&L account. How much is being transferred? 2,000. So basically there's nothing that is to be carried forward. So the entire short workings in this problem could be, no, they're not the entire, there is, yeah. So there's nothing carried forward since this is the last year. I've got disconnected. Okay. Skip the date. Okay, so we were at the transferring of the short working to P&L account. Okay, and the last one is transfer the royalties to the trading account. 32,000. Close this. I think they are all tallying. This is 32,000. This one also tallies to 4. 4,000, and this also done. So now we will start the entries in the books of the lessor, that's a landlord. Those online, any questions? Any questions with regard to that income tax? Okay. So we'll start with the entries in the books of the landlord or the lessor. In the books of, now we're going to say in the books of Raman, who's the landlord or who's the lessor, you can use any word. What we call the first account? What is the account? In the books of the lessor. Royalties receivable. Royalties receivable account. Royalties receivable account. Then we have the short working allowable account. What is this also called? Short working allowable account. It's called a short suspense account. Okay, so in case in the problem they ask you to prepare a suspense account, don't get confused. It's the same one. And then we have the lessee's account. Here the lessee is Hindustan Manufacturers. Hindustan Manufacturers account. Hindustan Manufacturers account. So now we just need to reverse the entries. It's just going to be reversal of the entries. So first entry is for royalties receivable. What will be the entry? Lessee's account, not landlord. We are in the books of the landlord. So lessee's account debit to royalties receivable to short working allowable. So lessee is here. Hindustan Manufacturers on 31st December 1997 to royalties receivable and to short working allowable. So I think it is 10 and 2, royalties receivable and short working allowable. Yeah. 10,000 and 2,000. So if we say 2 royalties receivable and 2 short working allowable in Hindustan Manufacturers, Wilton, stop talking. In the other two, you will have it as by royalties by Hindustan Manufacturers, 10,000, and you'll have in short working as well. By Hindustan Manufacturers, 2,000. We're in the books of the landlord right now, so everything is reversed. Next one is for the receipt. What will be the entry? For the receipt of payment. We are in the books of the landlord, so the landlord is going to receive bank account debit. What we are also allowing here, what we are providing for. Yeah, but we don't say income tax payable here, and neither we say income tax receivable, but we say use the word tax deducted at source. Okay, we use the word TDS, tax deducted at source. Bank account debit, tax deducted at source account debit to lessee. So in lessee's account, you will have it as 31st December 1997 by bank and by tax deducted at source. Bank account debit, TDS account debit. TDS here for the landlord is an asset or a liability? It's an asset, right? Because he won't have to pay that tax later. It's already been deducted. So when he's filing his returns, he can claim the benefit of this tax which has already been paid on his behalf. So tax deducted at source. The calculation will be the same. How much was it? I think 96 and 2. How did I get it? The same amount, same calculation. 9,600 and 2,400. The 12,000 which is paid to him, 20% of that comes to 2,000. And finally, transfer this to the trading account. To trading account. To trading account, 10,000. Move to the close this and then move to the second year. This is 12,000. 12,000. This is 2,000. Sorry, we don't need to close it. 31st December 1997. To balance carry down 2,000. Bring down the balance immediately. 1st January 1998. By balance brought down 2,000. This also closes. The same thing now happens in the second year. So it is Hindustan Manufacturers account debit, 2 royalties receivable, 2 short working allowable. 31st December 1998. How much is the amount? 12,000 and 4,000. And 4,000. So accordingly post in the other 2 accounts. December 1998, 12,000 by Hindustan Manufacturers. $4,000. Close the accounts. Sorry, transfer the royalties to the trading accounts and then close. December 1998 to trading account 12,000. So we are done with the second year. Close the second year. 16,000, 16,000. Here you have a buy balance carry down. Sorry, 2 balance carry down. So balance carry down is 6,000. Bring down the balance immediately. 1st January 1999. Bar balance brought down 6,000. And the royalties account closes. Royalties receivable. Now move to the third year. Now the third year is slightly different where the actual royalty is more than the minimum rent. So we don't have short working now. So what was the entry? It was Hindustan Manufacturers 2 royalties receivable. There's no short working now. So only Hindustan Manufacturers 2 royalties receivable. There's no short working. Royalties receivable are 32,000. So in royalties receivable, we have by Hindustan Manufacturers 32,000. Next comes the receipt of payment. Okay. Now here we need to be a little careful. Besides receiving the payment, he's also allowing some short working to be recouped. There's some short working that's recouped. There is a short working that's recouped. So I think we didn't do the second entry of the in the second year. I didn't do the second entry here. Can somebody tell me what are the this? What are the what is the total here? Tax deducted at source for the second year. How much? And okay, sorry. 3,200. 3,200. Okay, so coming now to the third year, 99. By bank, so how much is being paid? 30,000 is being paid. 20% of 30,000 will be 6,000. 24,000 is the actual amount that's paid, and also there's a short working recoup. So by short working allowable, how much is recouped? 2,000. There's a short working that's recouped in the third year, so you need to show that as well. So if you say by short working allowable here it will be 31st December 99 to Hindustan 2000 is allowed to be. There's nothing transferred to PNL account that year. So there's nothing transferred to PNL account. So you need to close it. Transfer the royalties to the trading account and close it. Close all the accounts. This will tally 32,000. 32,000. Here we have a balance carried down. To balance carried down, the total here will be 6. So the balance carried down will be 4,000. So bring down the balance immediately. 1st January 2000. Samran, please stop talking. Bring down the balance. $4,000. And the royalties receivable account closes. So we come to the last year now, the same thing. Hindustan manufactures 2 royalties receivable. December 2000, Hindustan manufactures 2 royalties receivable, 32,000. Then if you say that in royalties, you'll have by Hindustan manufacturers. $32,000. Then we have the entry for the payment. And there's also short working recouped, I think, in this the last year. Yeah, there is a short working recoup. So all those three we have again. By bank 24,000. By tax deducted at source 6,000, and by short working the same amounts. The same amounts because the amount paid is 30,000. So 20% of that is 6,000, and actual paid is 24,000. So if you say by short working allowable here, in the short working allowable account, you will have it as to Hindustan manufacturers. 2,000. We also have something else happening in the fourth year. The transfer of the short working to P&L account. How will this entry come? For the lessee, it is P&L account debit to short working. Here it will be short working debit to P&L. So in short working, it will be debit to short working to P&L. 31st December to P and L account 2000. Okay, so the last one is transfer the royalties to the trading account. $32,000, and that's how all the accounts tally. There's no balance carried forward left. Okay, so the only difference in this problem was the income tax.